What's going on, people? Hope you guys are doing well. In this video, guys, I just want to talk about how I find very good entries or sniper entries. If not a sniper entry, a very good entries in the market, just using basic principles and market structure. So what I'd like to talk about is here, firstly, before I come into the week or before I come into the trading day, I like to ask myself 3 questions. The first question is, who is in the money? And I'll explain why I ask myself all these 3 questions. So the first one is, who is in the money? The second one is, where's the liquidity or the stop losses? And the third one is, where's the price most likely going to react from? Okay, for my entry. So first question, who is in the money? So if we look at this, we can see buyers are currently in the money. The second thing is, where's the liquidity? Where's the stop losses? So we can see clearly here there's equal highs over here, so there's stop losses and there's liquidity at this level. The third thing is, where's price most likely to react from? So once the liquidity and all that gets taken out, where's the price most likely going to react from? So I've got this 4-hour resistance marked up. If you see here, we can see that price hasn't reacted yet from this order block or from this. This was an old support, which most likely will turn into resistance temporarily. So with this, you can also see, if I just bring up a line chart, another way to spot this is, we can see the price hasn't reacted yet to this level. We can see price has reacted just below this level. So I'm looking for for untested levels for where price will react from. Okay, so I'm always looking where price hasn't reacted from. So it hasn't reacted from here, so I'm looking for a reaction from this level over here, right, by using the line chart. So we can see, if we go back to the hourly time frame, so I've got that marked out. You can see over here I've labeled all of these things. So I'm creating a scenario instead of using indicators. A lot of people don't like to use indicators and like to rather trade market structure and, liquidity and all these sorts of things, and market psychology, market maker method. So this is basically what I'm trying to point out now. I've also got round numbers all marked out here, so I've got all the round numbers, 1,200, so I mark them out at every 500 points. So you can see I've got all the round numbers at 1 to 500, 1 to 00, all the way down to 10,500. So you can see how price reacts to all these round numbers. So those are also levels that I'm paying attention to. So you can see now price is broken above the 11,500 level. Now in this scenario, so I know that if you were in this trade, I know that if I was in this current trade and I was long from the bottom here, I myself would be getting nervous, and I'd be looking to take profits, because you guys know that. How often have you been in a trade and then the price will just reverse on you and you'll get taken out at break even? So we can see over here, buyers are going to start, whether it's hedge funds, whether it's retail traders, big money is going to start getting nervous at this point. Once price reaches these highs over here, we're going to probably see a bit of a profit release. So what I'm trying to get at here is, this trade, I'm looking to go short from this level, because what I'm trying to trade is the actual profit release from this move. So what I'm trying to get at here is, price is going to most likely push up. We're going to get a bit of a reaction from here. Okay, then we're going to break above this. Okay, the reason why we're going to break above this is because there's liquidity sitting up here. Okay, then we're going to get some reaction from that, and we're most likely going to either get a double top at this point or a triple top before the market continues lower. So basically I'm looking at the scenario where price is going to take out this liquidity and react to this 4-hour resistance, or this previous zone over here. The zone that I've marked out over there. So I'm looking for a reaction from that zone as a high probability zone, because obviously if you look at this move, there's going to be some kind of profit release. You can see over here price dropped, and then the profit release from the sellers occurred, just below this liquidity over here. So they took out the liquidity and then there was a profit release, but I don't really like to. This is all the Apple and the Amazon earnings, but you can see it happening multiple times. You get liquidity gets taken out, and then there's a big move to the upside. But after the liquidity gets taken out, you can see the profit release. Right, so once there's a big move to the upside, you can see the actual profit release. So you can see here the same thing here. There were equal highs over here. Price took out the liquidity. Now price is pushing up, so there's obviously going to be a profit release at some point. So I like to trade from high probability zones or high probability levels, and I like to trade where the price hasn't reacted yet, because you can see price, if we bring up let's go to the 4 hour. If we bring up a line chart, we can see that price hasn't reacted to this area. But you can see over here, for example, price, or this push to the upside, we can see price reacted from this previous resistance zone here. Now it's turned into support. So I'm always looking to trade from areas where price hasn't reacted yet from. Okay, because if it's already reacted from there, I'm not interested in trading from that level, because it's already happened. It's already reacted from there. So I'm always looking to trade from areas where price hasn't reacted from. Just trying to find another example here. You can see here an old support over here. You can see, this over here was an old support right over here, and you can see price basically pushed down. So you can see price pushed down, came back up and reacted to this old support, and then dropped. And the same, that's what I'm looking for up here. I'm looking for price to come up to this, but I'm not going to be in a rush, obviously, when price reaches this level, because it's very unlikely that price will just shoot up, to the moon. Obviously, there has to be a profit release at some point. So the next the highest probability area is going to be this area. But firstly, who's in the money? So we can see buyers in the money. We can also see that sellers are going to get nervous. Sellers are currently going to give up their positions, and that's going to also cause the price to shoot up higher. So I'm not going to be trading from this. I'm not going to be looking to sell from this point, because a lot of sellers are giving up their positions. Because when sellers get out of their positions, obviously buyers, when they sell, obviously there's buying involved. So this price is going to shoot up higher, and what they're going to do here is they're going to come up to this resistance. We may get a bit of a small profit release. They're going to trigger breakout traders to the upside. And remember, there's always, obviously, they're going to trigger breakout traders, and then for the market to come down, remember, there's a reason for everything in the market. If you always look left later on, you always realize why the market dropped or went up. And the reason why the market's most likely going to drop from this region is because of this order block over here. Okay, so this is just a scenario creation, because what you want to do is you want to create a setup. The reason why most retail traders fail is because they don't create scenarios. They just come into the market every week and just trade, on the inside of everything. So when you're trading on the inside, you never really want to be trading on the inside. Okay, because that's where all sorts of things can happen on the inside. A lot of manipulation and a lot of false moves can happen on the inside. The only reason you should be trading on the inside is for a retracement. So you could say, now this was the highest point of the move. The only reason you'd want to be trading from here is, once as if the price reacts nicely from a fib level or something like that. But I prefer to trade the reversal, or sorry, the profit release, because it's you can get bigger moves from that, and I'm just more comfortable trading the profit release after a big move. So you can also see our price is probably you can see our price messes around at these round numbers. Usually when price breaks a round number, it comes and retests that round number. It'll mess around a lot at those round numbers. So there's a high probability that price is going to react from this zone, either creating a double top or a triple top, maybe even also a liquidity grab just above this level. And then price is going to come back down and retest this round number, possibly even break through it. So you can see the market has climbed up, from this top here. The market's literally, up till this point, the market has climbed up 700 points. So if it reaches up to here, that'll be literally 900 points, nearly 1,000 points. So there must be at least a 300 point move back down. So I'm looking to catch part of that move back down, and then scaling out and possibly riding it back down to here, but obviously taking profit at around the round number. So this is just a way to also look at the markets without using indicators. You can also see, if I bring up the breakout indicator, you can see that this level here was a breakout level. You can see this is a key order block. So whenever you're looking at your high probability zones or areas, always use the 4 hour. Don't waste your time with the 1 hour or anything less. So you can see over here, this was an old order block over here, and you can see our prices come back and reacted to this order block. If we extend this one here, you can see how price actually broke below this order block and came back and retested and then dropped. So it's pretty handy to have these. Why the hell is this always coming up? It's pretty handy to have these 4 hour zones marked out. So I hope you guys got some ideas from this video. This is how I find my sniper entries and highest probability trades. But even with these trades like this, you must always trade with low leverage. So or low margin. So when you look at your margin on your MT4, if you use MT4, I would say never use more than 20% of your margin in total. So if you've got $1,000 balance, never use more than $200 margin. Always keep your margin, have 80% or more margin in your account. And trade with low leverage. And you can always, if you get this level wrong, you can always split up your positions in two. I want to make another video on that, on how to actually split up your positions, and what I do instead of using a stop loss, how I hedge, and then I split up my positions in order to catch a nice profit from in any given scenario. But that'll be in the next video. So I hope this video gave you some ideas. Hope you guys have a brilliant trading week. I'll catch you guys in the next one. Peace out, guys.